So it's Monday, August 30th. So this video is going to be pretty brief, but one of the things that I wanted to do with this blog was to improve my discipline. And to do that, there has to be complete transparency. So it's only Monday here, and I did some trading last night, and I think what I'm going to do is I'm going to have a video series posted to the blog, which is just going to be pretty much a wall of shame. Trades that I shouldn't have taken, should have known better, and maybe I can learn my lesson. So this will be like the first episode, I guess. Anyways, so I beat up my account pretty bad. Not the best thing to do. And I pretty much, my problem was I over leveraged. I took 2 trades where I should have been taking just one, as you can probably see here as I go down, go to history. This one right here on the pound I bought, lost 44 pips, and then the euro I bought and lost 55 pips. So it's not so much the pips, because so far these trades have been weighted by percent. I'm leaning towards changing them and making them all a fixed amount from here on out. So it will be just in terms, the pips will be more influential. Like here where it's minus 81, that isn't accurate, simply because this was one trade, and the lot size was not the same as this trade, whereas this one was more lots than this. So the percent up till this point has been more accurate, but now the pips will also be factoring in, if that makes sense. So I guess what I'm trying to say is, before, my lot size is variable, so maybe 1 lot here, 3 lots here, 4 lots here, 1 lot here, but now every trade will be, let's say, 2 lots, 2 lots, 2 lots. So there's not going to be a variation in the size of the trade. So anyways, as you can see, I had a couple trades here, this one and also this one, and they both did some damage early in the week, and it's a nice tail off to the equity curve there, as you can see. But the more important thing is, that's something I'll recover from, just understanding why that happened and how to avoid it in the future. So this initial trade was right here. We actually closed last week above support, nice beautiful close, came back, bounced, and looking for further upside. Now I entered this trade knowing that I had the weekly in my favor, the daily in my favor, and then a good value area, but my stop placement wasn't ideal. This is the euro trade, and so as you can see, one way to do it was just to place a stop right under it, but I knew there's a lot of congestion in here. Price could turn anywhere in this area, so I ended up putting a stop somewhere in here, and as you can see, the ideal place for a stop would be under this daily trend line, which is down here. So up until this point I would have still been in this trade. Now, do I know if I will, this will work out? I have no idea, but this was the place where I should have placed a stop, knowing that this is, if price breaks this area, then there's an exponential probability that it continues in the downward direction. So there should have been roughly 70 pip risk. I made it about a 55 pip risk. I stopped out, and now I'm just kind of sitting here thinking, okay, well, that was stupid. So that's the first thing. Now the other bad thing I did was I actually ended up taking 2 trades, which is fine, but now I'm over leveraging because I'm taking 2 trades in the same direction. All right. So second trade I get in right here. All right, it's a 15-minute chart now, and I have a stop below the swing point, all right, which is okay. Nothing wrong with that, and that one actually didn't work out, which is fine. That happens. But just the over leveraging. So now I have a position on the euro, position on the pound, and I know there's a very high correlation on the daily. We're talking about 85% ish. If one tanks, there's a good chance the other one's going to tank too. And looking at it in hindsight, well, it didn't work out so well. So what I should have done is taken one position. Most likely I should have just picked the euro. The euro was the better setup, and it was showing a little bit of relative strength, at least in the beginning. It's changed quite a bit. Another thing I've been trying to do is look at the euro pound and do some analysis on that, trying to get an idea of which one will be stronger in the long run. in terms of that, what I want to change is I want to start looking at dailies instead of the intraday, because intraday doesn't really mean too much to me. Looking at the daily down trend, okay, now we have a nice reversal bar of support. Okay, there's a good chance that coming days we'll see euro strength over pound strength, something like that, as opposed to let's go to 5 minutes and see what's going on. That doesn't make too much sense at this point because these trades are more longer term. I'm talking about the euro pound trades are more longer term, and then this stuff is like intraday. Swings, I should be looking at the bigger picture, trying to get an idea of which one gives me better bang for my buck. But again, I do think this is a good value area on the euro at this point, and I should have still been in this trade if I had chosen my stop appropriately. And I do think there's some upside potential. So in the future, I want to change that. I want to be saying, okay, well, if there's a high correlation here, I'm already in one position. Let's just leave it at that. And over leveraging can be quite a problem. So moving forward from here, I guess what I'm looking at now is I'm looking at the euro here. So if something does set up, I might just jump on in because it's important to treat each trade individually. This will be a nice trade with a very small risk, maybe 20 pips, and it's a good value area. The other thing I'm looking at is the Aussie, and this has been very strong. If we can come down into these support levels, perhaps this level right here, this trend line, that might be good. And then finally, a trade that I'm in at the moment is the yen. And the yen had a very big push up. News came out overnight, pushed this thing down. Now I'm looking at this trend line to hold. I saw that 1 hour bar, very nice, long wicks. Took a long trade, and I have a very nice small risk of 20 pips. And then looking in terms of targets, you can go back to a daily chart and say, okay, well, actually weekly is the best way to look at this because you can see if I take out this line, there's a very nice hammer bar, right? We also have this bump and run formation going on. 1 second. Right here, so this has been broken. Now if we do continue up, most likely this will be a good target area, and that's approximately 160 pips on a risk of 20, and I will take that all day because I know that when you play the game of odds, even if you're just a terrible trader, probability will run its course in the long run. So taking that into account, I think this is a beautiful trade. I do think there might be some opportunity to set up something on the euro and take that to the long side if I do see something maybe on the 5 minute, some near-term support holding or setting up. That will be encouraging. So that's pretty much it for now, and just pretty much just kind of learn, play it safe, and just recover and get back into the swing of things. No big deal. The only good thing I did implement was my money management. I didn't I was over leveraged, but not by a long shot. Each individual trade, both the euro and the pound, were within their own parameters, which was great. And so it was like taking 2 losses instead of 1, where it should have just been 1, but it was by no means blowing out of the ballpark in terms of something I can't recover from. So hopefully I can patch that up, see how things goes, and I'll have an update soon, and hopefully no more updates on the Wallace Shame. So thanks for watching MugTrading.tk.